Well, good morning, everyone. It's March 16th, and boy, oh boy, what a weekend, right? I mean, talk about things that can happen over the weekend. The Fed is at it again. But everyone's asking, why did the Fed, and for those of you who don't know, and probably everyone already does, but the Fed slashed interest rates again to almost zero and promised to do as I expected over the last few weeks, quantitative easing. I told you it was going to happen. They're going to put more money into the market. Now, everybody's asking, why did they do what they did and how's it going to stimulate the economy? And there was actually a perfect article about it, so I wanted to highlight the important parts for you, all right? Federal Reserve announced extraordinary action Sunday to try to blunt the heavy damage the coronavirus outbreak has begun to inflict on the economy. It slashed its interest rates to near zero, buying $700 billion in bonds. It's moving aggressively. It'll do all it can to minimize the blow to households, companies, and the economy. The actions are intended to keep markets functioning and lending flows to businesses and consumers. Otherwise, revenues dry up for countless small businesses. And that's really who's at risk right now, folks. Small businesses that are vulnerable, that have suddenly lost customers. These employers could be forced to lay off workers or even see bankruptcy protection. And that's what the Fed is trying to avoid. Chairman Powell, listen to this. This is very important. He acknowledged in a conference call with reporters that the Fed's action isn't likely to prevent a recession. The main reason? The economy is coming to a standstill because of the necessary behavioral changes that being made across the country to stem the viral outbreak, an avoidance of travel, shopping, and mass gatherings. Rather, the economic outlook the Fed recognizes depends mainly on how quickly the United States can arrest the spread of the virus. And that's what they're doing. They understand that this is not going to give us a short-term band-aid. This is going to give us a long-term stimulation of the economy. Folks, this is very, very, very positive. This is almost ensuring that as soon as we can get out of this mess, the market is going to resume another bull market for the next decade, just like it did in 2008. This is great, great news, especially if the downside from the coronavirus, if the shakeout is not as bad as they're expecting. And the expectations are really, really bad right now. Folks, this is how the Fed stimulates the economy. This is not going to prevent the coronavirus. This is not going to prevent the businesses from shutting down or closing doors. But this may help us get out of this mess faster. It's like putting extra water on a plant that's dying. All right. It may not cause immediate resuscitation, but over time it may help those roots grow. And that's what the Fed is doing. They're not thinking right now. They're not thinking short term. They're not thinking immediate action. They're thinking, what can we do for the long term? And that's exactly what the Fed is for. Now, so I'm very happy about this. Folks, lowering rates is nothing compared to quantitative easing. When the Fed did quantitative easing in 2008, from 2008 to 2014, get this out. Check this out, the value of the global market doubled in size. Since 2014, when they did not help with this quantitative easing, when they did not keep buying bonds, the global market did not increase in value. It was worth $68 to $70 trillion as of 2014 and still to this day. Now it's worth about 60 because of what's happened with the coronavirus. But the bottom line is what the Fed is doing right now by systematically buying bonds and keeping in, because remember, bonds and interest rates are inverse. So by buying bonds, they keep rates low. And by keeping rates low, it's going to keep money cheap. And if money stays cheap, it's going to help out over the long period of time. This fear that we had that interest rates were going to go up, it's not going to happen for a very, very, very long time now. It's like someone pressed the reset button. So I'm very happy about this. This is the action that the Fed should have taken. A lot of people, especially those watching the market right now, and the market's limit down, it's down 4.53%. They're looking at this as a sign of weakness, that the Fed is panicking, that they're throwing caution in the wind. No. The Fed is thinking long term. This is what the economy needs right now for long-term protection. And in a minute, I'll tell you everything that you can do. So the The Dow Jones is down right now. The question is the low the ultimate low that we had on Thursday of last week or not, where the Dow Jones went to 20,333. I still believe the Dow's going to break 20,000 or maybe come down to 20,000. But folks, I believe the worst is behind us. I believe the worst thing that the market, the majority of the downside is behind us. Why? Because we already know. We are already pricing in the worst case scenario. Let me show you what I mean. This is the VIX index. This is the fear index. I want to show you the level of fear. Actually, let me show you a better index. This is the VXX. This is the asset that I want to trade because I think it's peaked out. We're at 57 right now. If you look at a 10-year chart, it doesn't even go back 10 years, but if you look at the last, since January, let's see how far back this sucker goes. It doesn't even go that far back. Let's see if I could look at the VIX. Let's take a look if we could see the VIX. It's not registering the overnight data, but if you look if you look, this is 2008, okay? This is now, and we're probably going to be opening around the 60-something percentile, 63, 64, based on what I'm seeing the VXX doing, maybe even close to 70. So the fear level is extraordinary right now. Moreover, it looks like the bond market is starting to hover back up again, which it should because of what we're hearing from the Fed right now. So higher bonds, lower interest rates, and more stability. Now, if I look at the QQQ, the NASDAQ 100, pre-market, it is down. Let me just show you what we're looking at here. The NASDAQ is going to be opening right around the 175-ish level, which is right around here. Let me show you a short-term chart. Yeah, right around this level. And again, it looks like we're near the bottom. It doesn't look like the market's got that much more downside. I was looking at momentum levels overnight. And remember what I told you about the NASDAQ? I said the NASDAQ second shoe hasn't dropped yet. Look at this. I want to show you this. This is very interesting. And it's not 28% now. It's probably about 15%. I drew this line. We drew this line 3 weeks ago, folks. 3 weeks ago. And the market is finally there. And I believe this morning it's going to come in at around 17th, 15th percentile, which would put us very close to where we bottomed out over the last several years. See, the problem was when the market first came off, the NASDAQ 100 lagged, or led. But since then, it's been falling down and it's finally in this circle. Folks, again, we drew this circle. This was our target 3 weeks ago. If you don't believe me, look at my videos from 3 weeks ago, about 2.5 to 3 weeks ago. And I think we're going to come open around here if the market gets off from limit down. We'll open right around the 20th percentile, and that'll be the bottom. Remember something. The stock market anticipates everything we're thinking ahead of time. It's pricing in the worst case scenario that's known ahead of time. Right now, the coronavirus fear is pretty bad, and the market is pricing this into its value. So again, what you're seeing in the market is a representation of everything people are thinking is going to happen. And usually the fear level, especially with the fear level right now and the NASDAQ levels right now, it looks like we're very, very close to the bottom. And again, folks, as soon as we get out of this coronavirus mess, and it shouldn't be longer than a month from now, we're talking about a massive, massive bull market. So again, I think we're getting very, very close to the bottom. I think the bottom is very near us right now. I don't think there's going to be a lot more shock. I think we may have a little more turmoil, a little more ups, a little more downs. But I think unless something really crazy happens, and I mean like 50% of people getting infected, or the virus. I'm making all this up, by the way. The virus shifting into something more deadlier, becoming a deadlier virus. No vaccine for the next 10 years. Things that are not priced in right now. We're expecting a vaccine within the next 90 days to a year, testing and so forth. We're not expecting 50% sick rate in the country because we've taken precautions. President Trump took precautions. People are isolating themselves. Things are getting better. Now, let me tell you what you can do right now. Instead of focusing on the markets and figuring out and staying fearful, folks, practice safety precautions. Wash your hands. Wash your hands 10 times a day. Try not to touch your face. Keep personal space. The reason this is moving in Italy so fast and in China is because people in Europe and Asia have no personal space. Why do you think it's moving so fast and aggressively in New York and other major cities? Personal space. You need to put yourself at least 3 feet away from everyone else. So if you're going to go take a walk, if you're going to go to a doggy park, if you're going to go shopping, try to stay in outdoor spaces and minimum of 3 feet away from anyone. Your kids, your relatives, your loved ones, people you make food for. No one is immune. Just because it's your family member and you got sick, it doesn't mean that it's going to somehow not cross over. Use common sense and precautions. Pretend that you have a flu and you need to isolate yourself away from everything that's happening right now. Just pretend you need to completely isolate yourself, stay away from people, try to not to have personal interaction with people, try to use the phone, try to use Skype, try to use the internet. Pretend you have a flu. If everyone in this country pretended they had a flu for the next month, this would be over very, very, very soon. As a matter of fact, here people in Florida, we've had a handful of people have it. It's all due to travel. Try not to travel. Wash your hands. Pretend you have the flu. Remember, you may not know you have this for 5 days. Safety precautions, common sense safety precautions is what's going to get us out of this mess, folks. There's no denying it. I mean, there is no denying it. Be safe. Be careful and pretend you have a cold or a flu. That way other people will stay away from you. Try to avoid contact. Try to avoid having low personal space with people. Try to stay at least 3 feet away. Wash your hands. Use hot water. Don't go into supermarkets. Don't go into places that are congested right now. Try to stay isolated or away from others. And I don't mean isolated on an island. I mean, try to use common sense. All right. Now, between the coronavirus, what feels like the overnight bear market, I understand most investors are fearful and pessimistic. I get it. But not everything is pointing to more downside. No, not really. I'm looking at the market right now. We're getting a signal from the most informed investors that the worst could soon be behind us. That's right, insiders, insider activity. It's starting to heat up. Executives are scooping up shares right now. They are, and I'm about to start. I'm looking for deals. I'm looking to short VXX. I'm looking for S&P 500 bargains. There are bargains out there right now. Companies are, I'm telling you, executives are scooping up shares of their company stock at near record pace. So the people who have the most intimate knowledge of the companies are signaling that stocks are cheap, and they are. Folks, we're not going to be in this scenario forever. Now, insiders are worth tracking. Why? They know the secrets that help them build the 99% of the individual investors simply don't have access to. They have knowledge. They have knowledge that regular guys don't, and you can get in on that. We want to level the playing field. So we got in touch with America's #1 insider. Oh yeah, it's like that. We're not messing around. We're taking this coronavirus. We're taking both gloves off. We're fighting this coronavirus full on. Now, what this #1 America's insider has to say will change the way you think about markets forever. And I mean forever. You don't want to miss what he has to say, and you won't believe who it is. You really won't believe who I've got lined up for you guys. Follow the link. Check it out. Again, #1 insider, #1 American insider. He's going to teach you and explain to you how insiders have an unfair advantage. That's right, they do. Think about it. Who starts buying company stock? Who learns the quickest about the company's value? The insiders. The insiders know everything. They know what their stock is worth. They know who's buying, who's selling. And the ratio of insiders' activity has gone through the roof in the last few weeks. Stocks are cheap. Now it's time to figure out what insiders are looking at. Folks, I got the #1 insider for you. You will not believe who it is. You really won't believe who it is. Folks, follow the link below. Get on this now. Do whatever you can. You don't want to miss this opportunity. The market is setting up for the best bull run in a decade. I'm not kidding you. What the Fed is doing right now is going to be one for the history books. I'm not kidding. I'm serious. It's going to be for the history books. Take advantage of it. Learn insider. Learn what insiders are buying right now from the number one insider. And folks, nothing illegal. We've totally leveled the playing field. You're going to be able to do the exact same thing insiders are doing day in and day out. Follow the link below. Click now. Get all the details. You are going to love this. Talk soon. Bye, guys.